Hi, my name is Chijioke Dozie. I am the co-founder of Carbon. Carbon is a credit-led digital bank operating in Nigeria.
Chijioke, welcome to the African Tech Roundup, man.
Thank you.
Neobanks are a thing.
Yeah, they are.
I think it's fair to say the neobank movement in South Africa is probably, well, I suppose, taking up a lot of the oxygen when you account for how it's firming up in West Africa and North Africa, or in East Africa to some degree. I do sense that in South Africa, it's taking up all the oxygen in terms of, hey, this is what pragmatically winning at being a neobank looks like. What do you make of that?
That's actually quite surprising because, well, South Africa, definitely, there was a more developed banking system. I mean, look, I used to work in South Africa, 26 years old. I had a mortgage. You can't even get a mortgage in Nigeria certainly not at 26, but even now. So I actually always thought that excluding Time Bank, I don't think neobanks in South Africa have, they take up all the room. I think Time Bank is extremely successful. It's probably an outlier. Neobanks, I think, are more pronounced outside South Africa than they are in South Africa.
So then help me make sense of the space and the differences within markets around this concept. What does it mean uniquely to a market like Nigeria or West African market versus South Africa versus North Africa or other places?
Neobanks, when you think about it, let's say the US, neobanks are bank-like, but they don't have a license. Digital banks are neobanks with a license. So your Monzo is a digital bank. Revolut, till it got its license, was a neobank. So I think that's a distinction. Depending on the market, we were born out of different gaps. In the UK, it might have been ease of accessing finance. I mean, clearly there's a lot of financial inclusion in the UK, but it was very bureaucratic and clumpy. In Nigeria, we started because there was no access to credit. Banks wouldn't even pay attention to a certain strata of society. But when you look at South Africa, for instance, you had the Capiteks who were giving loans from 2004. You had African Bank. So you actually had financial inclusion. You had banks also playing in the space. So there wasn't that apparent need. But I think South Africa is probably similar to the UK, where it's now a UX issue because to be honest, banking in South Africa was it wasn't very fluid, put it that way. And I think Time Bank is actually stepping in to create that beautiful experience as well as the inclusion.
The democratization component as being frontlined in South Africa by African Bank and Capitec. What was the scene in Nigeria, for instance?
In Nigeria, there just wasn't any access at all. In 2012, when we started, we were a country then of like 180 million people, probably only 200,000 credit cards. I mean, if you look at credit as a percentage of GDP, it was like 6%. South Africa was 70%. So it's a huge underserved market for credit. And it still exists today. I mean, Nigeria is nowhere near the levels it should be given its size. And I think that's the opportunity.
In light of how you described or framed neobanking, to what degree are you leaning towards we're an up-and-comer without a license versus a digital-only bank with a license?
We're moving away from digital only because I think the market we operate in needs to have a bit of offline as well as online. So that's where we're leaning towards. I think in our market, it's difficult to be digital only.
I think it's interesting that banking is perhaps an industry more than most that's synonymous with the word trust. Mm-hmm. We have two brothers running what is easily one of the more visible neobanking plays coming out of West Africa. How has that dynamic uniquely mirrored what has basically translated over the years generationally in what in the UK might be Lloyds Bank or what in the US might be Citigroup? Thinking about it from a trust perspective, what has taken generations to unfold or to solidify in incumbents like the ones I've mentioned?
Well, I think with us, there's trust within our relationship, which creates stability. I mean, we've worked together for, since 2008. Professionally. And so we're a steady management team. We're the same sort of management team that started Carbon, was still there. So it definitely creates that stability, which hopefully creates trust. Because when you look at the leading banks in Nigeria today, the tier one banks, the GT banks, Zenith, etc. In 1990, they were the fintechs. They were startups. And now, you ask a 21-year-old in Nigeria, she looks at GT and thinks this is a solid, trustworthy tier one business. Ask her in 1990, it probably didn't exist. And you have to be there for that. So if Carbon wants to be like a tier one bank or even better, we have to be there. And so you need to create stability in the management team to get there.
I suppose that's what I'm teasing, that in a trust-based business, like the people are key. I'm just wondering how key people are in a modern day play towards, building that level of ubiquitous trust in a market. How outsourceable is this to faces we don't know, voices we don't hear, people we don't fully understand? And I say this really just to point to how much we hear from you both in different ways. We see you in the market. Your brother is we follow his newsletter and things of that nature. What's your sense of how to engender trust and build that over time? And are you intentional about that?
We're not as intentional as we should be, to be honest, because you're right. It's, in a way, we've built a business where we didn't want it to be based on personality. We've come from a situation where, banking used to be who you know. So I'll give you a loan because I know you and I know you can afford to pay, which meant that a lot of people who were unknown were cut out from banking. So with Carbon, for instance, I have as much power as the most junior underwriter to grant a loan. It's a process. But at the same time, I do think that especially in the early stages, we need to leverage on something for people to trust. And I think you're right. My father started a bank, but my oldest brother also has a digital bank. And I think definitely people might feel warm and fuzzy because we're also behind one. But at the same time, we have a great team. We have great processes. And even if I'm not there, I might not be the CEO, etc., but business still happens without us. And we're regulated, right? So we have to adhere to the requirements of our license. And I think being regulated and, maintaining that status should also give customers comfort, because there's certain things that we can and cannot do, as a licensed business.
And I'm wondering if at all you ever sit back on a Sunday and think, dang, I really am kind of stewarding a bunch of people's money. Or have you institutionalized that aspects as a person, as a leader, completely to an organization that you just happen to lead?
Look, it's a fine line. I think, one, we have institutionalized it. And secondly, I don't really want to be linked in that way, because I definitely want it to survive without me. I'm not going to be chained to Carbon for the rest of my life. I might be associated being the founder, but in also retaining and attracting good talent, they have to grow. And if people see Ngozi and I as there forever, then they might think, okay, there's a ceiling at Carbon, and we don't want people to think that there's a ceiling. We don't want that to be a ceiling at all. So I definitely am focused on making sure that it is institutionalized, that people feel like they can trust the platform with or without us, because hopefully we would have put all the things in place, as well as being licensed, to make sure that systems, trust, integrity are all in place.
So let's talk about this platform. Context setting for someone who's fresh to the Carbon Party or neobanks in general. How do you currently frame the market, your place in it? And I'll use this as a springboard to asking more questions about, what's keeping you up at night.
So we started as a credit business, digital lender, giving loans via an app. And then, the rest is history. The market was opened up. We have other digital lenders, and we have neobanks, and we have a lot of free. Fintech's free transfers, free banking, free, etc. And that market got so crowded that we also got lost in that market. So we've...
And that frame, is that an African frame, a Nigerian frame, a West African frame?
I think it's probably more Nigerian. Yeah, it's probably more Nigerian, the whole free. But, you see elements of it in the West, right? Where neobanks are not charging full price for their services. They're subsidizing customers. So we're now tilting towards value, because, if you think about it, we provide better service. We have better infrastructure than lots of banks for digital platforms. Earlier in the year, you saw a situation where traditional banks' digital platforms were overwhelmed, and there was a move towards the platforms like Carbon, OPay, etc., to do transactions. So we have a more robust platform for digital transactions, etc., and people should pay for it. And that's where we're going. We in everything we do, loans, transactions, we believe that if we provide value, customers should pay for value. And those are the customers that we want to attract, not the ones that want free. because once they want free, we can't be sustainable. We basically would need to require investor capital to keep us afloat, and that's not a good outcome for any company.
How much of this dynamic is precipitated by the VC winter that has basically turned everyone suddenly interested in fundamentals and performance and metrics like who knew revenue?
Yeah, I mean, look, Carbon was profitable in 2018 and profitable in 2019. So we have experience running a sustainable business. Definitely the VC winter has increased the urgency to make sure one is sustainable permanently. But we have been there, and it's a goal for us to always be sustainable.
I wrote a piece on Time Bank that suggested that they might be unwittingly positioning themselves as the new standard for what it should look like to invest in a neobank and what you might expect if you were an investor. Do you think that's a fair assertion? And in which ways do you buy into that? And in which ways do you think we still need moonshot energy backing neobanks and their growth, even if we're not seeing all the kind of results hard-nosed investor with chartered accountant sensibilities might expect?
Time Bank's a great model. I actually like Tinkoff, the Russian bank. In fact, when we started Carbon, it was Tinkoff and Capitec were the models that we were focused on. I think the Time Bank has a lot of advantages. When I look at Time Bank and I just said, I wish I could replicate that in Nigeria. And there are reasons why we couldn't. So for instance, Time Bank, I think there's a partnership with Pick and Pay. God knows how many Pick and Pay stores there are in, but there's probably only about maybe 100 stores in Nigeria of formal supermarkets. So you didn't have those formal distribution arrangements that one had in South Africa. And if you notice, the entrepreneurs in some of these neobanks have more experience. They have more professional experience prior to the startups. Whereas when you look at in West Africa, Nigeria, some of us don't have hardcore, let's say, financial services experience prior to starting that business. And I think it shows. It definitely shows. It shows in terms of even the investors that come to you, because I think the MD, the CEO of Tinkoff was ex-Visa. So when you have those kinds of professionals starting disruptor financial services, etc., there are lots of investors that feel very warm and fuzzy backing them. But if you're a 28, 27-year-old man, woman, limited experience in financial services, but you see a gap, you'll definitely get some investors, but you won't get as many as you would if you were running Time Bank or the founder of Tinkoff, etc.
I'm fortunate not to have to be in the position to make investment calls on what to back and when. But my sense is generally that we do need the kind of patience and wherewithal to invest in earlier generations of attempted iteration to bring banking to the people, to the masses, alongside a disciplined sort of ethic around, is this a business or not? Fortunately, it's not my job to determine which, but in your world, what are you inclined towards more as a founder? Are you inclined towards innovating into gaps, or are you inclined to wishing you were in a market that was more mature and just building a great business on top of stacks and stacks and stacks of past success and rails that are already begging for innovation on top?
Ooh, I think that's a very unfair question to someone in a market that is...
We won't judge you. We won't judge you.
Hard times. No, look, I think I like hard things. My co-founder and I, we like hard things. And if you think about starting a lending business in 2012 at a time where there was no credit infrastructure, credit bureaus were practically non-existent, and we were giving our capital to people, strangers we had never met, it shows that we have a big appetite for risk. So innovation has always interested me and always interests me. To answer your question, I would probably go the middle route, where it's a big enough market, but there's still, innovative gaps. So I would say like in India or Brazil. And I think that's why emerging market investors always tip towards Latin America or India and parts of Asia, because these are big markets that you can intervene. I mean, if you look at Nigeria, as big as it is, has a small TAM. And if you look at someone like Carbon, we've built infrastructure. We've built credit algorithms. We've built all this expertise that could easily be deployed in a different market, in Indonesia, in Brazil, etc. And we could do probably 10x what we're doing right now. So if we had a bigger market, or if Sub-Saharan Africa was like Europe, where because I'm licensed in Nigeria, I could passport into Ghana, Cameroon, etc., that would now be more interesting, right? And I think that's a challenge we have in Africa, is that our markets are too small.
Are you name dropping places where we should expect carbon to show up?
I wish. I wish. I mean, if anyone's listening and wants carbon to show up in any of these countries and has a license and funding, please get in touch.
What do you typically default to for people like that you just shouted out to or listening? What do you point to as, hey, carbon's over here getting it done? Anything you'd point to? I suppose it's an opportunity to say, kind of quote your brother, who does this often on his newsletter. But yeah.
What do I point to? Jeez.
Is it transaction value? Is it the sheer number of people who are using the platform actively, however you define that? Is it how much longer you've existed and figured things out? Is it the fact that you've evolved your model?
I mean, look, we've been around for 12 years. We've seen about 3 or 4 economic cycles. We've seen COVID. We survived that. We have probably, I would say, processed over 5 million Nigerians for loans. So we've seen a lot. I think that is probably the metric to brag about, because transaction value, for me, those are vanity. We're a team that has existed for over 12 years. We raised only about $12 million in equity. And, for what we've built, I think a lot of competitors have probably raised 10x.
There it is. That's what I'm talking about. No, to be fair, I think that's what stands out to me. I don't rate transaction volume either, but I do think what you've achieved on as little as you have, surviving the odds you have, sticking together as a leadership team. To me, these are the things that I would, and I don't bank with carbon, and this is not a paid segment, but these are the things I would say engender the kind of trust I would expect from a bank. Like a bank in the making, the way we'd look, we all kind of just take for granted Standard Bank is today. And I think these are the kind of things I'd expect from that sort of thing early on. So yeah, big up to you.
Thank you.
Perhaps with the time we have left, here's a question that I hope will sort of invite you to introspect. You have the ability to make 2 move adjustments at key inflection points in carbon's history. 2 decisions you made that would alter the course of the business as it is today. What are those 2 moves?
Oh, there's one I wouldn't say. It's too controversial. But I think definitely one was the decision in 2020 during COVID. We didn't know what the world was going to look like. And we basically decided to pull back in lending. So if we gave you, let's say, ₦500,000 loan, we would give you 200,000 or 300,000, because we wanted to just sort of conserve and make sure that we could actually still be available for lots of people. And I think it almost felt like we abandoned customers, because in the time of need, we weren't there for them. And then what that created as well was, typically a customer would repay us back and then get another loan. Now, if they felt, well, carbon's not won't be able to give me what I need as normal, I'm going to hold on to the money and not pay back, or pay back when I can, which then meant that NPL spiked, or we'll have to have write-offs. And I think if we just kept going, we would have come out of COVID in better shape. That definitely affected our business, because going into COVID, if you were exposed like we were in terms of we had a big loan book outstanding, then we would hurt. If we started after COVID, that would have been great as well. So I think that was one. Another point was,
I want the one you don't want to talk about, bruv. What's a few secrets between friends and a couple of 100,000 listeners?
Actually, this is for founders, a lot of founders, actually. I think that we were too kind to investors. I think there are times when we needed capital and we would reinvest our own funds. And I think that if we had been brave enough to actually call investors to order and say, we're not subsidizing, we would have been in a different position.
Listen, Chijioke, Dozie, thanks for being on the African Tech Roundup, man.
Thanks, Andy. Cheers.